Alright, what's up everybody? We're just going to do a quick microphone test because I did get a new one. Well, it's actually not true. I didn't get a new one. I just found the one in my house. So if you can hear me and if we are streaming in 1080p, just go ahead and give a thumbs up in the chat and we will get started here in just a moment. But I want to welcome everybody to downtown Miami. It's very windy tonight. We got a storm rolling in. So we'll get started in a minute. Alright, it looks like we're good. So, good evening everybody. And welcome back to Walks in Wall Street. Today is January 17th, 2024. It's about 8:46 p.m. Eastern Time here in Miami, Florida. It's a very windy night. We're supposed to have wind gusts of over 45 miles an hour tonight. So maybe we won't be out for too long. We do have a storm coming in. But I think there's a lot to talk about. Now, as you know, we are officially in earnings season. And every time we have earnings season, we start off with the major banks, financial institutions, and the like. And a lot of times we can use, these financial services companies, banks, investment banks, as a possibility, or I like to say a leading economic indicator for the health of the economy, check up on consumer spending, see how healthy the consumer is in general. And we can do that a number of ways in which we are going to talk about tonight. Now, particularly when you have major banks like JP Morgan Chase, Bank of America, and the like reporting earnings, they're also major credit card issuers, right? So we can check up on the health of consumer spending. We could see if delinquencies are increasing or decreasing. And if you read my research piece that I sent out, it's probably about 3 months ago now, when we were covering earnings season last quarter, we're watching very closely this trend or this trajectory of credit card delinquencies trending back towards Q4 2019 levels. Now, that's just before the pandemic, when you had all of the, after the pandemic, you had all that stimulus, people were actually paying down their debt. You're starting to see the 30, 60-day, and 90-day delinquencies increase, but nothing too alarming. But I think we just need to put it on the radar. We'll also talk about Goldman Sachs. So Wall Street mega bank Goldman Sachs did report earnings earlier yesterday before the bell. Now, Goldman Sachs tops revenue estimates on better than expected asset management results. But what I do want to focus on is the quotations around investment banking. Now, mergers and acquisitions, investment banking, IPO market, that's really Goldman Sachs' bread and butter, right? They make a lot of money on the advisory fees for M&A business and taking companies public. And as we've been talking about, the IPO market, M&A business, and private equity over the last 2 years have really been at a standstill. It's really been in gridlock for obvious reasons, right? We've embarked on one of the tightest monetary tightening cycles in over a decade. And as money becomes more expensive, lots of corporations put their acquisition targets on hold. But CEO of Goldman Sachs, Lloyd Blankfein, said even though Q4 was a disappointing quarter for M&A activity at Goldman Sachs, he does forecast the pipeline to be rather robust for 2014 for numerous, or I should say a number of reasons, right? As they're talking to clients, talking to customers, they expect interest rate environment to stabilize and go down, which should open up those corporate budgets, allow corporations to feel comfortable taking on debt again in this environment where rates may stay stable and come down. And that means there could potentially be a pickup in mergers and acquisitions. Maybe companies will tap the equity markets via IPO. So that's something we need to watch. We're going to do a deep dive into that on the newsletter, but I just thought you should be aware of it. I'm going to go ahead and put this article in the chat for all of those who are interested. Or you can go to goldmansachs.com/investorrelations and download the earnings deck. Okay, great. Everybody, I'm going to go ahead and close up the laptop here. I'll say hello to everybody in the chat and we will get started. Just a quick announcement and reminder. Tomorrow is Thursday. So we will be sending out the second issue or the second edition of the Behind the Street newsletter for 2024. This is our free equity research piece and investment newsletter we send out to all of our Walks in Wall Street subscribers. If you want to receive that tomorrow, make sure you check your email, or you could scan the QR code on your screen, punch in your email, or type news, N-E-W-S, in the chat, and the Nightbot will drop the link to our Substack. We are going to be talking about a lot on tomorrow's newsletter. We're going to be covering some of the major investment banks that have reported earnings. We're going to be doing deep dives. We're going to be talking about potential PE expansion throughout this new bull market. There's going to be so much stuff to talk about, and I don't want you to miss it. So go ahead and sign up with the QR code or the link below. All right, I'm going to go ahead and close up my computer, and we'll get started. Welcome everybody to Miami. All right, so we are testing out the microphone yet again. So apologize if the audio is a little bit shaky tonight. But I see Gary Carpenter, welcome. Good to see you as always. Robert, what's up? Wendy England, thanks for joining. Steph UF. Now, for those of you who are new to our Miami live streams, we are reporting directly from the base of the 200 Southeast Financial Center. This is the temporary headquarters of Ken Griffin's Citadel Securities. Now, Citadel is a major hedge fund and market maker on Wall Street, and they've officially moved their headquarters from Chicago, Illinois, to right here in Miami, Florida. Now, they've taken over the entire 20th floor of this building. Now, the 20th floor used to be the WeWork, right? Ken Griffin sort of pushed them out of the building, and they are going to be breaking ground soon on their new super tall office around the city. Looks very cool and futuristic. Hey, Touted Tara, good to see you. DC322, what's up? Welcome. ETC333, good to see you. Oh, is the microphone not working? Let me see. I think there may be a dead zone here. We'll see if it comes in and out. Ah, okay, dead spot, cool. Yeah, I think since they're demoing this building, they're doing a major demolition. The internet is a little bit spotty. Hey, RB, this is good evening, what's up? Now this building is cool. This is the Miami Tower. Very colorful. You can see they have this all roped off here. I wonder how they're going to complete this demolition, because this building is absolutely massive. I was looking at the new plans for the new building. It's insane. It's a really, really cool building. So we'll see. I just got to make a pit stop here for a second. This is the Whole Foods across the street. And you can see the JW Marriott. Let's get another look at the tower, Miami Tower. Positive Princess. Tom, do you feel just as safe walking around Miami as you do New York City? I feel safer walking around Miami than I do New York City, but I feel safe both places. All right, we're gonna do a little bit of a jaywalking action here. I'll be with you guys in a moment. Okay, now we are good to go. Hey, Matthew M. So this is downtown Miami, where you're going to be walking to Brickell tonight. This is where we were coming from, the 200 Southeast Financial Center. You can see the Intercontinental Hotel. Troy Atman, what's up? All right, cool. Ivan Hernandez. Thanks so much for joining us. Appreciate it. Now, there's just a couple quick things that I think is important to cover tonight. It's going to be a shorter than normal live stream. We're probably only going to be on for about an hour. But we are in the heart of earnings season now. So we're going to have all of the major banks, financials reporting. And even though I think it's important to realize that even though some of the results, particularly Goldman Sachs, came in a little bit light, particularly in the investment banking, mergers and acquisitions sort of categories, we have to realize that the data that's being reported now is in the rears, right? It's more important to look forward. And if you looked at some of the statements that the CEO of Goldman Sachs, Lloyd Blankfein, kind of put out there, or David Solomon, excuse me. I'm still thinking back to the previous CEO, Lloyd Blankfein. David Solomon is the CEO now. I keep thinking about Lloyd because we keep talking about his apartment at 15 Central Park West. But anyway, he says pipeline looks pretty robust. And from the customers and the clients that he's talking to, they feel as if interest rates are going to stabilize. They feel as if interest rates, or the Federal Reserve, is at the peak of their tightening cycle. There's going to be no more interest rate hikes. And if anything, if you look at the futures market, pricing in rate cuts for 2024. So as corporate budgets get approved, and as companies make the decisions to acquire other companies and merge, they could pull the trigger on a lot of these deals this year. And I think that is why you've seen in the tail end of 2023, a lot of these stocks rally into the end of the year. Right? Usually the stock market and equities are forward-looking by about 6 months. So I think that's important as earnings season progresses and goes on, particularly since we're going to be back in New York on Sunday. We're going to be doing more deep dives into those companies. But real quick, just for some perspective here, we are now standing outside of the brand new Aston Martin Tower. Look at that. That thing is incredible. But what I think I want to do tonight, since we didn't do it last night, let's cross the street and check out the Epic Hotel and Residences. This place tends to have really, really cool cars, exotic vehicles, and even some really interesting yachts that are parked directly at the docks here. So we'll go ahead and check them out. Ivan Hernandez says, "Hey Tom, is it cold in Miami?" For Miami standards, it's pretty cold. It's maybe about 71 degrees tonight. It's not that bad. I mean, for people who, complain that Miami is very hot and humid, it's actually not humid at all. It's a chilly night. I have on a little bit of a sweatshirt here. 71 degrees. Today was cloudy almost all day. The sun came out for like 15 minutes. I think this is a McLaren. So yeah, I mean, now is pretty much the time to be down here. Very moderate, calm, and cool temperatures. All right, now guys, check this out. Overlooking right here, this is Brickell Key, which is its own island just off of Brickell and downtown Miami. If you look all the way into the distance, that is the Mandarin Oriental Hotel. Same exact hotel that is in the Deutsche Bank Towers in New York City, right there, 59th Street, Columbus Circle. Look at this, they're expanding the Miami Riverwalk. So this is all the Aston Martin Tower. So I guess it's called dredging. They've sort of widened the canal here so the yachts can pull up. They can let off the residences at the Aston Martin Tower. And this is going to be connected to here, which is exciting. So you're going to be able to walk all the way around, which is really cool. Let's go down and check out some of the boats. Hey, Jules is here. Says, "Hey Tom, how are you? Just back from business trip to Paris." Whoa, how was Paris? I'd love to go to France. I've never been. Never been. So I trust your trip was well. Try to travel. It's good to see you, Raz. This is where I'm at in Palm Beach. It was sunny today. Yeah, in Sunny Isles Beach, where I spent the majority of the day, downtown Miami. It was partly cloudy almost all day, but it was kind of nice. Look, I'll take that over New York City's, 20 degrees and snow. I always love looking out over Brickell Key. It's stunning, stunning. If we have time, maybe we'll walk over the bridge to Brickell Key. TPAC 5000, you are not late, you are right on time. We're just kind of hanging out, checking out downtown Miami, checking out some of the yachts and boats that are parked here. This is the W Hotel and Tower. Those are some of my favorite palm trees too. Richard Scott says, glad you're out of New York City weather. I'm glad too. It's nice to have a little bit of a break. I needed it. I think that's all I need is just a week to 14 days down in Miami, just to relax. I had some good meetings down here, so thumbs up to that. I'm very, very optimistic about 2024, and just a little bit of perspective from what I'm seeing, meeting with, business people down here, big real estate companies. I mean, the demand is still very, very high for buying down here. I was meeting with this one project all the way up in Satellite Beach, which is about 2.5 hours north of Fort Lauderdale. They haven't even broke ground yet on the project, okay? It's going to be 3 44-unit luxury condos right on the water at Satellite Beach. So about, 134 units? They've already pre-sold just over 20. They haven't even broke ground yet. And they've done no marketing, zero. So no marketing, didn't even break ground yet, and already pre-sold 20. And they have the deposits in escrow. So one of the things that we're seeing here in Miami-Dade County particularly is all of this pandemic craziness, right, have forced so many people to move down here that it's pushed up the prices to nosebleed levels in Miami-Dade County. So that is pushing people up to Broward and Brevard County to look for housing. And there's not a lot of inventory, so developers are incentivized to build further north. Now, I was listening in on the sales pitch, which was fantastic, by the way. I had no idea that up there near Satellite Beach, SpaceX is there, I think Grumman, and there's also a Space Force base that I had no idea about. That's either in Satellite Beach or a little bit north. So those are very high-paying jobs, right? And if you talk about the South Florida real estate market historically, it's been very volatile because it tends to go through these big boom-bust cycles because people tend to buy, not their primary residence here. It tends to be, a summer home, a vacation home, I should say a winter home. But now you're starting to see real lucrative, high-paying careers in Miami-Dade, in Broward County, and Brevard County. So I'm optimistic on it. Very, very optimistic for sure. This is a pretty cool shot here of this massive yacht and Brickell Key in the background. Hey, Dan Sang, what's up? Says, hey Tom, hope you're enjoying the Miami weather. Dan, I was joking with my friend today. I said the only thing that Miami is missing is a really good Molotang place. There is zero, and I'm talking zero, like authentic Molotang Chinese places in Miami, Florida. So I think if anybody could open a really good Molotang place here, you would kill it. Richard Scott says, do you read The Real Deal Miami about real estate? Yeah, I read The Real Deal. I think that's a good publication. They have an office near the Hudson Yards, I think. The Real Deal New York, too. Hey, RB, says, Tommy, your positive attitude is surely great for your faves NYC and Miami, but is uplifting for anybody listening. Thank you so much, RB. All right, let's walk up here and go across the way. I think this is a really cool spot. This may be a sushi place. Oh, hey, let's see it. This may be a sushi place here, and you're sitting pretty much right by the water, overlooking Brickell and Brickell Key, which is pretty cool. Troy Atmans, Tom, are we entering a market rut, or is this just a pullback? I think it's just a pullback. Now, look where the S&P closed today, right? If you look where the S&P closed, we closed well off the lows, but we are in a little bit of a correction. I call it the handle of the massive cup with handle, right? And I'm going to write about this tomorrow. And here's something I've made. This is a massive mistake that I've made in the past. that I'm trying not to make again. And I was talking to one of my really good friends who's a very, very successful hedge fund manager, sort of like a mentor of mine. He's been doing it for 30 years. And he's like, the number one mistake you can make during the start of a new bull market is dislodging your core stock holdings if the stock is up 20%. And then you have a little bit of a correction, right? People get freaked out coming off of a major bear market and they blow out the whole position up 20%. You know, bull markets, in a secular bull, you're going to have about I think it's 5 to 8 corrections in the market where the S&P pulls back 5 to 7%. So if you think about the major indice pulling back 5 to 7%, that means the individual stocks could potentially pull back twice that, right? If you're thinking about the beta. So I think that the market still looks good. I think this is a normal pullback. I don't see anything in the bond market that's making me an alarmist. So I'm really trying not to dislodge any of my core positions that I've sort of worked so hard to build. Now, that being said, if you have some massive, cataclysmic event, a geopolitical event where we could have nuclear war. I'm not sure if you guys read that piece. I try not to read the news, but somebody sent me this piece that I guess Sweden, and I don't know if this is true or not, I don't even look at the news, but Sweden apparently is preparing for almost guaranteed war with Russia, and so are some of the other nations as well. So, I mean, pending, if that's like a real reality where, it's all out World War III and nukes are launching, then yeah, the S&P is going to be limit down for the next 3 weeks. But pending that, things look good. Pending that, things look good. It's going to be important to watch the reaction to earnings. So let's say even some companies miss earnings. If a company bombs earnings, right? So for example, let's say Microsoft reports, they bomb. If Microsoft is down maybe like 2 or 3% unchanged on a big miss, that is real strength. So as long as the true market leaders don't crush through their 50-day moving averages on very high volume or break the 200-day, I think at this moment, this is a normal correction as the indices test their highs. I don't know, what do you guys think? Do you think the market's going to roll over? Do you think this is going to be a double top in the market and we're going to come down significantly in this election year? I don't think so, but I could be wrong. This is the City National Bank, Miami Tower. Looks very cool, very unique. Hey, Hawaii is joining us. Good to see you. Thank you for joining. Jason C. What's going on? Oh my God, you're getting 6 inches of snow tomorrow? Yeah, I'd much rather be in Florida too. Jeff says you really should at least look at the news. I try not to. That's one of my rules. Ignore, avoid the news. Now, here's another very good piece of advice I got, not from a very successful real estate person, broker. And he said, I could show you guys the podcast, but he said, I try not to look at the news at all because the news is all negative. If you watch the news, over 50% of the news that's reported is going to be negative, right? There's some serial killer, there's some school shooter, there's some, stock market analyst that's predicting, the next 2008 financial crisis. Everybody is going to lose their jobs. It's just all fear, it's all negative. And particularly the political conversations, right? if you turned on any, major, Fox News, CNN, if you turn on CNN, it's the world and democracy is going to crumble to its knees because of Donald Trump. And if you turn on Fox News, it's this country is in the worst position it's ever been because of Joe Biden. I don't want to be a part of that. I don't want to think about it because it's going to erode my psyche, right? It's going to impact my business. It's going to impact how I interact with my fellow Americans. In turn, it's going to take money out of my pocket. So he said this: if there's something very, very important that you must know, you're going to know about it, right? You're going to hear it from your friends, you're going to hear it from your family. If there's some blockbuster breaking news event that's going to be make or break, you're going to hear about it anyway. So you don't need to turn on the news. So I'll read financial news, Wall Street Journal, Financial Times, sometimes. But besides that, it's totally radio silence for me. Wow, it is windy up here, guys. I don't know if you could tell because I have the microphone in, but the wind is quite literally probably blowing 25 miles an hour up here. Very windy. Hey, Optimus17, what's up? Good to see you. Thanks so much for joining. DC322s is very smart. You don't need the unnecessary negative news. Yeah, and a lot of the news is opinionated news, by the way, right? Is opinionated news. The local news in New York City, it's, everything is going to collapse. New York City is going to be a financial crisis. The city's never going to come back. It's just doom and gloom. I can't have that around me. I refuse. I refuse. Guys, look at how cool this looks here with these boats pulling up. Hey, the AUS Fly Girl, thank you so much for your very generous $10 donation. I appreciate you and your support, and hopefully you're having a fantastic evening, AUS Fly Girl. Thank you for your support. Hey, Troy Atman is here. Says, Tom, I think reading some of these business papers makes me a worse trader. I trade worse after reading all these articles. Yeah, I think it could be information overload, right? Sometimes it's the analysis paralysis. And when I was in college, I really fell victim to that, like in a major way. And it makes you think that you're a know-it-all, right? It makes you think that, you're the smartest person on earth. This is a cool shot of this boat going under the bridge. Look at that. Look at how cool that is. So I'll give you an example. When I was in college, I would sit in the computer lab and I would watch hours and hours and hours and hours of interviews with Peter Schiff. And I like Peter Schiff very much, by the way. This isn't a knock against Peter Schiff. I actually had the pleasure of meeting him in person. He was a nice guy, smart guy, and his son is super smart too. Peter Schiff's son is just a great guy. That being said, I would binge watch all of these interviews and all of the keynote speeches that he gave on the great financial crisis. And this was back in 2014, 2015. And it was just all how, all this macroeconomic thesis that the US dollar is going to go to zero, US is going to suffer from hyperinflation, the S&P 500 is going to fall 50%, and all these European mining stocks are going to go to the moon, and it's going to be the worst economy the US has ever seen. And it got me so freaked out that I totally missed the bull market from about 2014 all the way up into 2016. Totally missed it, totally sidelined for the majority of the thing, right? I had a couple bets to the downside on the market, I had a couple bets on, you know, these little offshore drilling companies, and I totally missed one of the most ferocious bull markets in US history, just because I inundated myself with all of this macroeconomic fear porn bear news. It wasn't until I started to have a little internship at a hedge fund with a successful hedge fund manager where it's like, just focus on the earnings. There's always going to be something to worry about, right? I mean, if you think back throughout American history, there is always going to be something to worry about, okay? You know, World War II, you know, the US is going to lose World War II, you know, and then once we won World War II, if you go back and look at some of the research documents from some of the best traders on Wall Street, they're like, oh my gosh, the US, you know, the Allied forces, we won World War II, all of these, you know, working age men are going to come back to the United States with no jobs, the stock market's going to crash. Well, what happened after World War II? Massive economic powerhouse boom, Team America all the way, right? So nobody knows anything, including myself. There's always going to be the next fear narrative, right? There's always going to be a crisis. You know, the Vietnam War, 9/11, people thought that it was going to be the end of the world. But innovation in America and American exceptionalism has always proved itself that it's going to charge on, right? Doesn't matter what the market conditions are, right? Doesn't matter if the world's on fire, if there's so much macro bear news. You know, Steve Jobs still created the iPhone, okay? You know, Jeff Bezos and Amazon created Amazon AWS, cloud hosting, cloud computing, right? And there's going to be something else. There's going to be more Apples. There's going to be more Microsofts. There's going to be more Amazons, and they're just going to be. They probably are in some, you know, little workshop somewhere in some WeWork in New York or in San Francisco or in Miami. It's never. So long as the United States is the leader of the free world in terms of economic prosperity, economic mobility, free and fair markets, the cycle is going to continue. Now, that doesn't mean the market's going to go up all the time, but it certainly doesn't mean that there's going to be, you know, an extreme economic cataclysmic fallout where we go through 50 years of, you know, just total down market. I guess anything is possible, but if you focus on the earnings, if you focus on the fundamentals, you will do well in the market. If company XYZ, oh, look at this color of this Tesla. It's like a beige. I don't even know what that color was. I've never seen that color in my life on a Tesla. But anyway, if you focus on the earnings, right, and if company XYZ made $10 a share this year, and it's projected to make $50 a share 2 years from now, the stock's going to go up, right, with a random walk. So, yes, it's important to focus on the macroeconomic factors, but there's never going to be a Goldilocks scenario where the world is at peace, where there's not some, you know, raging war in the Middle East, where there's not some fear of communist takeover in some remote country somewhere. There's always going to be something to worry about. Do what's within your control and focus on the earnings of these companies, right? Earnings and liquidity drive price. There's great American companies to buy, and as earnings grow, stock prices appreciate over time. That's all you can do. And that's just my opinion. It doesn't mean I'm right. Hey, Town Now, good to see you. What's up? Connie's here, welcome. Okay, we are headed towards Mary Brickell Village. This is going to be the new construction site of One Brickell City Center. Look at that. So all this is coming down. It's half demoed. They're going to knock the rest to the ground. And this is going to be a new super tall that's going to connect to Brickell City Center. Kind of cool. Carlos is in, and if another pandemic happens, do you think that the economy will resist? If there's another pandemic, do I think the economy will resist? I think people will resist. I think if there's another quote-unquote pandemic, I think there's going to be massive resistance from people. I don't think we're ever going to do the lockdowns again. I don't think the governments will be able to trick us into doing that again, in my opinion, but I guess in theory anything is possible, but you know, fool us once, shame on me, right? Peter says, I seldom trade in and out of many positions. Yeah, I mean, I think over trading kills performance, right? I think Peter makes such a good point. Peter has the comment of the night, in my opinion. And we're going to write about this tomorrow, by the way. So tomorrow is Thursday. We're going to be sending out our financial newsletter, Behind the Street. And one of the things we're going to be talking about is a history of true market leaders in the stock market. And if you think about some of the best performing stocks over time, imagine if you purchased Apple and sold it up 20%, right? I mean, look at all the gains you were missing. If you can sit in a stock, right, or in a company through 6 consecutive beat and raise earnings reports, on average, that stock will go up over 200% with 6 consecutive beat and raise earnings reports. So if you're just buying and selling stocks intraday, you're going to miss out on all of the moves in these monster stocks. You got to buy these great companies and you got to hold them, right? In my view. And the vast majority of the movements in the stock market happen after hours, right? How many times during a good earnings report do you turn on CNBC or Bloomberg and say, hey, Apple is up 10% after hours on a beat and raise earnings report, right? So if you are selling your stocks going into earnings, right, sometimes you're going to miss out on a lot of the appreciation, which is important. So this is officially Brickell. But if you like these conversations we have about the financial markets, if you scan the QR code on your screen and punch in your email, tomorrow after the closing bell, I am going to be sending out our free investment research piece to all of our Walks in Wall Street subscribers. So every Thursday, or I should say every other Thursday after the market closes, we send out our free Behind the Street newsletter to all of our subscribers. We cover US equities, we cover fixed income, and we have a little section on New York City and Miami real estate. So if you want to sign up, just scan the QR code, punch in your email, or type !news, NEWS, and the Nightbot will drop the link to our Substack. We have about 2 years of archived research, all for free. that you could read. You could listen to the audio version of the podcast right from Substack. So feel free to check us out there. This is currently South Miami Avenue. This is what they call the mini Manhattan. This is one of my favorite neighborhoods in all of Miami. Hey, Penelope from Tennessee, what's going on? Thanks for joining us. I like how they decorated these lights, or I should say the palm trees with the lights. I think it looks very unique. Okay, let's cross the street while we have the light. Townhouse. Tom, did you watch the president of Argentina at the World Economic Forum today? It was awesome. You know, I didn't watch that. I know that the Davos thing is going on today, but I kind of get a little bit nauseous. Seriously, every time I think about Davos and the World Economic Forum, it's a little bit nauseating to think about. So I actually try not to watch it. I always watch the interviews with the major CEOs of the investment banks. Like I watched Jamie Dimon's interview, just because I like Jamie Dimon, even though I disagree with him on a lot of things. I think he's a good guy. But yeah, not really a big fan of the World Economic Forum. But this is that bar, Moxie's. Hey, Kenny. Says, will you ever take us for a ride on the scooter? I tried once. I don't know if I'm allowed to. I always get stopped when I'm on that thing. But I'll try. I think it's easier to get standalone footage on it, but Matthew M says, do you think the US debt will bite us soon? I do, but here's my opinion on it. The United States, and I think humans in general, are very good at adapting to their situations. And I think we're going to come up with a solution on it before this debt monster unravels. And I think what a lot of people underestimate, or I should say miscalculate, and I did this for a while too, it's you think it's going to happen today, you think it's going to happen tomorrow, you think everything's going to come crashing down like right now. And it'll come crashing down when it wants to, not when you want it to, right? Just because, you know, we all know that the US national debt, the interest on that debt alone is pretty soon going to eclipse our entire military spending budget for 1 year. That's a major problem. But I think there's a lot of smart people in the US that are well aware of that problem. And we are in an election year. And I think the voters will vote for a candidate and hopefully people who will fix that problem. So that's what I think. Maybe that's a little bit naive, but again, I try to focus on what's in my control. And I can't control the national debt. I know it's a problem. I think that Congress spends like drunken sailors, to use Stanley Druckenmiller's analogy. But there's nothing that Thomas Malloy is going to do right now that's going to fix the national debt problem. However, if you look at the bond market will tell you when it's a problem, right? When you have a cataclysmic sell-off in the debt market and US debt is being dumped and you're seeing yields spike across the board, that's when you kind of know, okay, there's a major problem here. But as of right now, there's actually been quite a rally in the bond market into the end of 2023, and rates have come down a little bit. So Another thing I'd like to point out, has anybody ever heard of the old saying that when the United States sneezes, the rest of the world catches a cold? What is the alternative, right? There's a lot of, very, very smart economists out there that say, you know what, China's going to stop buying our debt. India's going to stop buying our debt. All of these countries around the world are going to stop buying our debt because they don't want to subsidize our way of life anymore. They've had it. Now, my question is, okay, then what is the alternative? Are they going to go buy Russian bonds? Are they going to buy Russian debt? What is the alternative for that? Are they going to buy Chinese debt? We've talked about the Chinese commercial paper market. That is a disaster. I'm going to be writing about that tomorrow. That's a nice Tesla Model X. The Chinese commercial paper market is in free fall, and that is a cataclysmic disaster. That is a 2008 that's happening now. There's a few ETFs where you could track Chinese commercial paper. I think Crane Shares has a few. I think it's KHYB is the ticker. But yeah. I don't know. What are your thoughts? What do you guys think? Obviously, it's a problem, right? We can't just keep spending into oblivion, right? I think the only reason why we get away with it is because the US dollar is the world's reserve currency. And that's the only reason why we can get away with it. And I don't see the world's reserve currency changing to any other currency anytime soon, in my opinion. Hey, Arsenal fan 13, thank you so much for your very generous $10 donation. It says, hey Tom and chat, wonder if you got my email on the Tri-Rail extension to downtown Miami. Also, there's a Miami YouTuber named Joel Franco who made a video showing the ride. I did not get your email, I'll have to check. Usually I'm pretty good about getting back to emails, but Arsenal fan 13, thank you so much for your support. And right when I get home, I am going to be looking for your email. So thank you very much. Lisa Roberts says the US is the best house. Yeah, in a really effed up neighborhood, yeah, I guess. Sam M, what's up? I know, Brad's brain is like there's $1 million cars anywhere, everywhere here in Miami, and Tom is like, look at Tesla. Yeah, I don't know, I don't really have the appeal to Lamborghinis and things like that. I like Teslas. If I were to get a vehicle, it'd probably be a Tesla Model X. I don't know. This is a very good restaurant here. If anybody is new to Brickell or new to Miami, this is one of 2 restaurants I've been to down here. It's an Argentine steakhouse, very good, right across the street. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams every night between New York City and Miami, starting at 8:30. John Sunderland says BRICS is trying to change the US reserve currency. I don't think it will work because if Trump gets in office, then he will not want to do business with those countries who join BRICS. Yeah, BRICS is the biggest, in my view, the biggest joke going. And I have a whole thesis on this, and I don't have time to lay it out tonight, but maybe I'll write about it in the newsletter. But I think BRICS is a total non-issue, total joke, in my view. No, I didn't see that. MK says, Tom, did you see the Tesla charging stations? They're all frozen in Chicago, and all the people were stuck. I didn't see that, but I actually do have a question for the audience here. So, apparently, speaking of Argentina, because they have the new president we were talking about a little bit today, is this true? Maybe we have some people from Argentina in the chat. Now, is it true that when you go to Argentina, the vast majority of people drive EVs? Is that true or is that false? I had a friend the other day tell me, he's like, hey, I just came back from Argentina. When I went there, almost everybody was driving an EV, and they say that there's a new, well, not new, there's a Chinese company, I forget the name, BHY? I forget, I'm blanking on the name. It's been a long day. But apparently this Chinese EV company, they say it's a superior product to Tesla. And in mainland China, for the first time, this company eclipsed Tesla's sales. So Tesla's in the number 2 position now in China. Does anybody maybe could help me out? What is that name of that Chinese EV company? BYD. Yes, thank you guys. I apologize. Anybody have any opinions on that? Quite honestly, I've not looked into it. Anybody have one of those vehicles? Anybody have any opinions about it? Is it a superior product to Tesla? And if it is, why do you think so? I think that's something important to watch. I believe their sales numbers for the first time overtook Tesla. Ariel is totally false. There's no EVs in Argentina. Yeah, I don't know. I was kind of like looking at him with the side eye too. He's like, hey, I just came back from Argentina and like half the cars were EVs and they were this company. I was like, really? I don't know. Well, I'm going to start to follow the company now because they are making ground on Tesla, and a lot of people say it's a superior product. So we'll see. D-Yanks is the very low quality vehicles. Yeah, I mean, this guy could have some sort of a agenda about it, but his words were, it's a superior product to Tesla, and I was like, really? I don't know about that one. I've never even heard of the company. I don't really follow a lot of the auto OEMs. The only one I follow is really Tesla. Ariel says probably that's on Chile next to Argentina. Someone says Warren Buffett is invested in the company. That's very peculiar because usually Buffett never invests in China. Very seldom, like very, very seldom will he make an investment in China. All right, let me check my battery here. This is a nice Bentley here. Dan Sang says, Tom, that's total bull crap, don't buy it. Yeah, this is why I'm asking you guys. Peter says BYD Seagull subcompact sells it for $11,400. Someone says, hey Tom, I'm from Tunisia, and the last couple of years, everywhere I look, it's BYD. Not electric though, but they're selling like crazy. They're cheap, reliable, even though the build quality is not that great. Wow. Well, thank you for that insight. Yeah, I mean, I think that's one of the valuable things about this channel, right? We could sort of ask the audience, if you will. We have an international audience, so. Now, I used to be an extreme, and this was back in my college days. I actually wrote a thesis on the coming China economic boom. Turns out I was totally wrong. The exact opposite happened, right? And I think the exact opposite is going to continue to happen. I think that there's going to be reshoring of the supply chains. People are going to be moving out of China. And I think that Japan and India and Korea are going to be the 3 countries in Asia that benefit from the Chinese decline, I think. Okay, let me check my battery. Yeah, we got a couple minutes. Yeah, now I think this is an interesting exercise here. If you have your Bloomberg terminal, you know, you can just use Google. You know, look at the Nifty 50, which is the Indian equity market, right? And zoom out on a monthly time frame, okay? So look at the Indian equities market and then look at the then look at the Japanese stock market. And this is something we've been talking about for a long time. Now, Japan has not hit a new all-time record high in their stock market since 1989, the tail end of 1989. So even way before I was born even. But we're about, I think, 1,000 points off the high in Japan. I'm predicting over the next 3 years, Japan's going to blow through all-time record highs and go on a new golden age in Japan. Same thing is already happening in India. I mean, the Indian stock market keeps, just ripping new highs every day. And that's very telling, right? Then go ahead and look at the Hang Seng Index, which is the Chinese index. And if you want to go even deeper and do a deeper dive, do your research on some of the Chinese commercial paper, like a lot of these Chinese companies that issue debt. Nobody's buying it, right? It's in a severe, severe bear market. So a lot of times stocks in and of themselves could be leading economic indicators. So if you have India performing very well, if you have the Korean Kospi performing very well, if you have Japan performing very well, and China, in a severe bear market, I think the capital flight has decided. Rocky Rock's India's stock market is all pumped up, nothing real. Okay, well, let's say if you're right, let's just assume you're right. India's stock market is all pumped up, it's not real. Okay, so why is the Hang Seng Index at multi-decade lows and 52-week lows? Why aren't they pumping that up, and how come that's not all real? If institutions are going to put their money to work, right, and they are managing money of pensions, they're managing money of endowments, why are they allocating it to these markets? Why are they allocating it to the US, India, Japan, and Korea, and why are they not allocating it to China? There has to be a reason, right? There has to be a reason for that. I don't know, I think it's a good conversation to have. But tomorrow, just a quick reminder for those of you who are joining, we're going to be talking about this a lot more in tomorrow's newsletter that I'm going to be sending out to all of you. So tomorrow, right as the market closes, I'm going to be emailing everybody our free investing newsletter, Behind the Street. It is going to be the second issue of 2024. You're not going to want to miss it. So if you want to receive that email tomorrow, just scan the QR code on your screen, punch in your email, or you could type !news, NEWS, in the chat, and the Nightbot will drop the link to our Substack. We publish every other Thursday after the market closes, and we will be sending it out tomorrow. We're going to be talking about a lot. But everybody, I do have to run because the phone is going to die and I do need to get home. I have a pretty long ride back up near Sunny Isles Beach. But I want to thank all of you for joining us tonight. I think this was a blast. It was a fun live stream, walking around Miami, having a good chat about the markets. Hopefully everybody that's up north is staying warm, staying safe. If you enjoyed the live stream, feel free to leave a like on the video. Click the subscribe button if you're new, and feel free to join us right back here tomorrow as we venture to Brickell Key, right here on Walks from Wall Street at 8:30. So Austin City Limits, Wendy England, Matthew M., Abdullah, Marcelo Gill, Optimus 17, Chris B., thanks so much. Sharon, Amy T., I appreciate you. Town Now, DA, Taditara, Fernando, Mohammed, thanks so much. Joseph Hardaway, Michelle K., Dan Sang, all of our good moderators. Stephen Bate, I appreciate it. Positive Princess, NNB 45, as always, stay warm up there in Canada. DC 322, RB, Unij 23, Marcelo Gill, NAV 407, Penelope, Colton Manning, Wayne McKay, I appreciate it. Arsenal Fan 13, and Carlos. Carlos, thank you so much. Signing off from Miami. There's always a bull market somewhere. You just need to know where to look. See you guys tomorrow. Take care.